Pensioners, your bank account is about to face scrutiny like never before. 3 major changes coming in 2025 could delay your payments, cut your benefits, or even stop your pension entirely if you're not prepared. This isn't just another government update. It's a financial shakeup that could impact your livelihood. If you rely on your pension, what you don't know about these new DWP rules could cost you money every single month. Stay with me, because I'm about to break down everything you need to know to protect your pension and your bank account before it's too late. The Department for Work and Pensions is introducing new regulations that will fundamentally change how pension payments are processed. If you depend on your state pension, pension credit, or any other DWP benefits, this is your wake-up call. These changes could mean delayed payments, additional scrutiny of your finances, and even automatic benefit reductions if you don't act fast. Let's start with the first major change: real-time bank account matching. For the first time ever, the DWP will have direct access to updated banking records to verify account ownership. This means your name and national insurance number will be cross-checked against your registered bank account. If there's any mismatch, such as an account being in someone else's name, a joint account issue, or outdated details, your payment could be delayed or even stopped while the discrepancy is investigated. The government says this is to reduce fraud and overpayments, but for pensioners who haven't updated their banking details in years, it could be a serious headache. Think about it. Many pensioners use joint accounts with a spouse or have their payments managed by a trusted family member. Under this new system, even these completely legitimate arrangements could be flagged. If your bank details aren't up to date, you need to act now. Don't wait until your pension is delayed or stopped to fix an issue that could have been prevented. The second major update is even more invasive: automated financial monitoring. Until now, the DWP has largely relied on self-reporting. If your savings increase, if you receive a lump sum, or if someone moves in with you, it's been your responsibility to notify the DWP. But in 2025, that's changing in a big way. The DWP is expanding its partnership with HMRC and UK banks to automatically track financial activity for pensioners receiving means-tested benefits. That includes pension credit and housing benefit. Here's where it gets serious. If your savings cross the threshold of $10,000, your benefits may be reduced. If they exceed $16,000, you could lose eligibility entirely. And unlike before, where checks were sporadic, the new system could run financial checks monthly. This means if you inherit money, sell a car, or even transfer funds between accounts, it could be flagged immediately. This isn't about spying, it's about tightening the system to prevent benefit fraud. But for pensioners who aren't tech-savvy, these changes could feel intrusive and overwhelming. Financial experts are advising pensioners to keep clear records of where their money is coming from and where it's going. If you receive a gift, sell personal items, or get financial help from family, you need a paper trail. If the DWP questions a deposit, you'll need a clear explanation to avoid benefit suspensions. And here's something many pensioners don't realize: joint accounts count too. If you share an account with a spouse or relative, their savings could affect your claim. That means even if you personally don't have much money, your benefits could still be at risk. Now is the time to review your finances and ensure you won't be caught off guard. The third major change is a crackdown on undeclared income from private pensions and investments. In 2025, the DWP will automatically cross-check benefit claims with income sources like private pensions, annuities, and rental properties. If you receive any income that hasn't been declared, your benefits could be adjusted or even stopped without warning. Many pensioners forget about small pensions from previous jobs or assume a rental property doesn't count as income. But under this new system, those assumptions could cost you dearly. If you have any additional income, make sure it's declared now, before the system catches it for you and penalizes you retroactively. On top of these changes, the DWP is making a major push towards digital banking and online verification. Traditional building society accounts and post office accounts, widely used by pensioners, may not meet new banking standards. The government wants to streamline payments, reduce manual processing, and make verification faster. But the downside: if you don't use online banking or a smartphone, you might struggle to adapt to this shift. Already, post office card accounts are being phased out, and many banks are discontinuing paper statements. The message is clear: digital is the future. But what does that mean for older pensioners who rely on face-to-face banking, paper letters, and landline telephones? many experts are warning that this digital shift could leave vulnerable pensioners behind. Community workshops, digital inclusion programs, and telephone support will be critical, but ultimately, the responsibility falls on pensioners and their families to prepare. If you or a loved one isn't comfortable with digital banking, start making arrangements now. Some banks, like Barclays, NatWest, and Santander, still offer basic accounts with in-person service and printed statements. But with bank branches closing rapidly across the UK, even those options may not last forever. The sooner you prepare for this transition, the smoother it will be. Another major shift, the DWP is launching new digital ID tools, including biometric checks and two-factor authentication. This means logging into pension accounts will require additional security steps, like fingerprint scans or phone verification codes. While these updates aim to prevent fraud, they could also make it harder for older pensioners to access their own accounts if they're not comfortable with technology. If you or someone you know struggles with digital security, now is the time to get familiar with these new systems before they become mandatory. These changes aren't just theoretical, they're happening, and they will affect millions of pensioners across the UK. If you haven't updated your banking details, reviewed your financial situation, or prepared for digital banking, now is the time. A small oversight could mean delays, payment suspensions, or even lost benefits. Don't wait until it's too late. Take action now to secure your pension and financial future. If you found this information helpful, share it with someone who needs to hear it. Many pensioners are unaware of these changes, and spreading the word could make all the difference. Stay informed, stay prepared, and most importantly, don't ignore these warnings. Your financial stability depends on it. Thanks for watching UK View. Subscribe for more updates, and we'll see you in the next video with more critical insights on UK pensions and benefits. Take care.